Welcome back to Trading Hour. Well, Deepak Jasani from HDFC Securities joins us now to discuss market fundamentals and his top sectoral picks. Thank you so much for joining us, Deepak. First up, earnings season seems to be starting off on a bit of a dampening foot. What are you making of earnings at the current point of time, and which are top sectoral plays from the current levels?
Good morning. Thank you for having me. Now, the Q2 earnings so far have proved to be a little muted than expected. Anyway, the expectations were quite low, but this time around the results have been even worse than expectation. The main issue, I think, is around the demand. Demand has remained muted across the board, and that is leading to realizations being under pressure. Apart from this, I think there are disruptions in select sectors. Regional competition is picking up. Down trading is happening. Regulatory and judicial interferences are also creating a lot of heartburn among the corporates. D2C brands are now easily available due to the spread of online trading or online e-commerce. And that is giving some sort of a competition, especially in the metro and the urban areas, to the established FMCG brands. So broadly, I think the results are not justifying the valuations which we had a couple of days back. And that is why we are seeing some sort of a sell-off from the foreigners. And this especially at a time when the China has announced a series of stimulus measures. So the Chinese economy, the Chinese market is now proving to be more attractive than India at the given point of time.
Okay, so you think there'll be more correction which is on cards in the Indian markets before there is a good entry point?
So from the lows of October 23, we have seen dip buying emerging every now and then. So we have seen markets falling by 5% or almost 3 to 4 times, and then markets correcting upwards, and a correction of over 9% around the election time. And again, markets recouping the entire losses. So this time around, we are lower by about 6 to 7% from the recent highs. And going by the past trends, I think it is fair to assume that one more attempt of dip buying may happen, maybe a couple of percentage down from here. Now, whether that upward momentum will breach the near-term highs, that we will have to see. Going by the confluence of the negative factors, it looks a bit difficult at this point of time.
Deepak, which sector do you think can help markets go ahead and rebound from the current depressed levels?
I think despite the neutral or muted results, I think banks and BFSI, the entire BFSI sector continues to look attractive to us relatively among the other sectors. Apart from that, IT seems to be a tactical buy. New age businesses, depending on what kind of businesses you are comfortable with, maybe one or two picks out of there. Auto ancillaries, mining are some other stray sectors which look good from the near-term perspective.
Okay. There's a lot happening in the commodity space as well, Deepak. We are seeing new highs coming in from gold, silver. Commodities in general have done well. Do you like any of these commodity plays in the stock markets?
Commodities you will be able to play either through gold jewelry companies or through metal companies, I suppose. There is no third way to play the commodities. So gold jewelry companies, the jewelry companies have done quite well over the last few months. The valuations have expanded quite well. Most of them are sitting on a lot of inventory gains. However, looking at the high gold prices, I think the offtake of jewelry this time around could be a little subdued as compared to the past. So there, I think looking at the high valuations, one could sort of wait for some sort of a correction happening there. If one is bullish on gold, then I think the better way to participate would be buying SGBs, sovereign gold bonds, or even physical gold for that matter. On the other hand, metal stocks showed some upward momentum when the Chinese stimulus measures were announced. Within the metal space, I think we are more comfortable with the non-ferrous side rather than the ferrous side. But we'll have to see, and we'll have to observe as to how the Chinese stimulus measures play out, and whether it leads to an kind of demand bump up for building infrastructure or for supporting the real estate out there, which could lead to better times for metal companies out here.
Thank you so much for joining us, Deepak, and giving us your views. Moving on, public account.